Hello everyone. This is Rajat Krishna Lal. Welcoming you all to this video lecture, which is based on GST. So, in this short lecture, we will be discussing about the goods and services tax, which is a kind of an indirect tax which is levied on sale of goods and services. So we will be knowing the basics of this GST, that how is it imposed, uh, what types of GSTs are there, and how this GST is different from the earlier version of indirect tax, which was prevalent in India till 30th June 2017. So, first of all, let me tell you that earlier, before the introduction of GST, that is goods and services tax, there were basically two kinds of indirect taxes for the goods and services. One was known as sales tax, which was different according to the different states of India. In some cases, it was also known as VAT, that is value added tax. So some of you must have heard this word VAT earlier. So this VAT was another name for sales tax, right? Sales tax is much more familiar word for you all, I guess. But prior to the implementation of GST, that is GST was implemented in India on 1st of July 2017. So before that, as far as goods are concerned, physical goods are concerned, we were having an indirect tax which was known as sales tax or VAT, and it was state specific, which means every each and every state was having its different set of rules and regulations for imposing this sales tax. Rates were different, times were different, medium of collection was also different, modes of collection was also different. So a bit of a lengthy work it was, since for example, if you are having a business setup in Uttar Pradesh and you are also having a business setup in the state of Rajasthan, so you must be complying with two different sets of rules, that is sales tax for the state of Rajasthan and the sales tax for the state of Uttar Pradesh. So now, after since the GST has been implemented, this is also known as one nation, one tax. So all these different state-wise VAT system and this sales tax system has been abolished, and now we are having just one single umbrella of GST, which covers the entire nation, right? Secondly, VAT and sales tax was about your goods, and as far as services is concerned, the services were taxed under the Service Tax Act, right? This service tax was governed by the central government. So we were having a two parallel sets of indirect taxation system, that is sales tax at the state level and service tax at the central level. No input tax credit was allowed between them, no set off was allowed, and rates were also different for each of them. So with this implementation of GST, all these indirect taxes have been removed, and barring few cases like municipality taxes, gram panchayat taxes, all these have been replaced by one tax, one indirect tax, which is GST, right? Now we come to the next slide. GST and its components. Now, how this GST is imposed, how it is collected, is a matter of question which is to be cleared by the students who are new to this subject. So, you should remember, students, that GST, although we have a single name, that is a goods and service tax, but it is imposed in three manners, or rather we can say that three types of GSTs you can find, in fact four, right? So it is a destination based tax. First of all, you should know this. I am moving my sorry. I am moving my this cursor on this line. GST is a destination based tax, which means that the final burden will be on the consumer, and in the chain of supply, distributor or the seller can avail the input tax credit for the taxes paid on the purchase of raw material or purchase of services for the manufacturing of goods. So how this GST is imposed on the different kinds of sales of goods and services? So the first one is the intra-state supply. Intra-state supply means that when you are selling your goods or services within the same state. So let us say, for example, if you are selling some goods in Uttar Pradesh only, your office or your business is also in the state of Uttar Pradesh, and you are selling it also in the same state, that is Uttar Pradesh. So in that case, you have to this will be the case of intra-state supply, and in this case you have to pay the GST in two parts, right? First one is CGST, that is Central Goods and Service Tax, and the second part will be SGST, that is State Goods and Service Tax. So, for example, suppose if you are selling a good, suppose you are selling a product X, be it a television, be it an air condition, or be it a refrigerator, anything. And let us suppose that the tax rate is 20%, the GST is 20% on it. So if you are selling it in intrastate, then 10% will be the CGST and the remaining 10% will be the SGST. So the rate will be the same, but it will be bifurcated in two parts in case of intrastate supply or intrastate sale or intrastate transaction. uh, Rate will be the same, that is if it is 20%, then total rate will be the 20%. But in case of intrastate supply or intrastate sale, 10% will be the CGST, that is Central Goods and Service Tax, and 10% will be the SGST. CGST will be taken up by the central government. It will be the share of the central government, and the SGST will be the share of the state government. Now, if you are selling your goods from one union territory to the uh, to another state, right? Then you have to pay just uh, uh, just like intra-state supply. You have to pay two kinds of taxes, that is CGST, Central GST, and Union Territory GST. Again, the sharing of this tax will be 50-50, right? Just in the case of intrastate supply, and the imposition of tax will also be the 50-50. So you will be showing the 10% as CGST and 10% as UGST, that is Union Territory GST. And if the sale is within between two states, that is interstate supply. That is, for example, if you are if you are doing business in the state of Uttar Pradesh, and you are selling your goods to some person in say Rajasthan, state of Rajasthan. So in that case, the GST that will be imposed will be known as integrated GST. This will be a single rate. So suppose if you are having a 20% of tax rate on a product, and you are selling it from Uttar Pradesh to Bihar, then the tax will be charged at the rate of whole 20%. The name of the tax will be IGST, that is integrated GST. It will be collected by the central government, and later on the portion of the state government will be given to them. So this is how this GST works across the nation. So just remember that in case of intrastate, there will be two kinds of taxes, that is central GST and state GST. In case of sale from one union territory to any state, it will be central GST, GST and UGST, and in case of interstate sale, it will be IGST, that is integrated GST. Now let us come to the next slide. That is how this GST is different from our previous indirect tax system. So as we have discussed that prior to this system of GST, we were having VAT system and service tax system. Now we are all these things are combined, and we are having one single tax by the name of GST, that is goods and service tax. So the first point is that it has simplified the indirect tax system, because in the earlier system there were as many rules as there were the states. So let us say, for example, if you are having business in Uttar Pradesh and also in Rajasthan and also in Delhi, then you have to comply with three different acts, that is Sales Tax Act of Delhi, then Sales Tax Act of Rajasthan, then Sales Tax Act of Uttar Pradesh. So now this problem is resolved, and whether you are doing business in one single state or you are carrying out your business in two or three or four states, the act which is applicable to you on will be the GST only, right? And rates will also be the same. In case of earlier tax regime or the earlier tax system, the rates were also different. Maybe Rajasthan might be charging 20% tax rate on a product, and on the same product Delhi might be charging say 18% tax, or UP might be charging 25% tax. So that was a bit difficult for the businesses to do the bookkeeping and documentation and recording and compliance of all those things, which has now become much easier and much simplifier. The second most important thing is point is the reducing cascading effect of taxation. So GST has helped a lot in reducing this cascading effect. Now, what is this cascading effect? This cascading effect means taxing again and again, taxing a particular transaction again and again. So in the earlier system of state-wise sales tax, if you are selling your goods from one state to another, so you cannot avail the input tax credit um, on your goods, on the goods purchased by you. So for example, if somebody has purchased raw material from another state and has paid VAT or sales tax on it, so that person cannot use that portion of tax paid uh, as input tax. So that tax becomes the cost, and that cost will be included in the price, will be covered by the price of that particular product. So it becomes a bit expensive for the ultimate consumer. Now, since under this GST system, you can avail input tax credit even if the goods are purchased from another state or from another union territory, or even in case of service also. So since the manufacturer or seller can avail the input tax credit on every kind of purchase, whether it is interstate or whether it is inter from another union territory, or whether it is of some kind of service, so that has successfully removed the cascading effect of taxation, and ultimately the cost of the things have become less, because the business person can take the tax credit input, avail the tax input tax credit, and as such it will not become the part of the cost. It will be recovered in only the differential part of the tax will be charged, right? Third one is GST council will be the rule making body. So there is a council of this council consists of the union finance minister and several ministers from each and every state as representatives. So this body makes the rules and regulations regarding the tax rates, regarding the returns date, and other relevant rules and regulations as whatever are required from time to time. So this body conducts meeting regularly, and by keeping in view the market demands, the economic scenarios and all, they make different rules at different time period, and they might provide some exemption to certain goods and services from GST. They might include some new goods or services into GST. They might change the increase or decrease the rates of taxes, rates of GST. So this work is done by the GST Council. Okay. So next is wider tax base. Since this GST has become simplified, and there are certain threshold limits for registration, so the tax base of indirect taxation has become wider in GST as compared to the earlier tax regime of sales tax and service tax. Now these next 2 points, that is input tax credit in case of interstate transaction and input tax credit in case of taxes paid on input service. These are the same point which we have discussed in the first point, that in case of GST, seller or manufacturer can avail very easily, he can avail the input tax credit on the taxes paid by him on the interstate purchases, and also he can avail the input tax credit on the services, if any, used in the production or manufacture of some kind of goods. In the earlier system of service tax, this particular facility was not available. Any tax paid on purchase of services was not available at all for the in as input tax credit for to the uh, seller or manufacturer. But now under the GST regime, yeah, one can avail the taxes paid in the form of service also, right? Next is unified and simplified returns and forms. So as we have already discussed that under the old regime there were as many acts and regulations as there were states. So there were different sets of rules, different sets of regulations, different sets of returns and forms for every state. So let us say, for example, if you are having one business in Delhi, one business in Rajasthan, one business in Uttar Pradesh, one business in Bihar. So at a time you have to manage four different kinds of sales tax acts, different returns, different forms you have to keep, you have to maintain. So this was cumbersome process and cost consuming process. Now under this GST system, all these returns have been unified. Entire India will be having single return, single date, single forms. So it has become much easier for the business person to keep the records, maintain the records, and comply with the indirect tax regulations, right? Next is multiple tax rates. Multiple tax rates means that an ideal GST system should have maximum one or two tax rates, but for the time being in India, we are having five different tax rates, right? Like 5%, 12%, 18%, and 28%. So this tax rate has been kept in the beginning, so that revenue can be generated more and more. Later on, we can expect that this multiple tax rate system will reduce to at least one or only um, two different tax rates. But for the time being, we are having multiple tax rates, and the one benefit of having multiple tax rate is that if a government wants to provide some kind of relief to a product or commodity which becomes essential for life, then it can reduce tax rate on it by shifting it to some lower tax rate category from a higher tax rate category. Or if it wants to curb the consumption of a particular product, then it can shift that particular product from the lower tax rate category to a higher tax rate category, right? Next is lesser time for interstate movement of goods. Now what the this point is, it wants to explain that in the earlier tax regime, when there were different VAT system or sales tax system under different states, so if you are sending your goods from one state to another, then much of the time was consumed at the check post points. Every container or truck or the vehicle which is carrying your goods will be checked by the respective tax departments at the entry point in the city. But so this was a very time consuming process. Much of the time was wasted in waiting and long queues and all. But under GST, since it is one nation tax system, one nation one tax system, so this time for interstate movement of goods has reduced to a significant level. So this is also another distinguishing feature of this GST from the earlier tax system, and it is also beneficial for the business community and for the society as a whole. And lastly, curb on tax evasion. So since we have till now in this particular lecture we have discussed that a wider tax base is there, and availability of input tax credit is there. So GST has led to the successfully curb the tax evasion practices. Now the even the small sellers or manufacturers are also easily covered under the GST, and this has increased the widen the tax base, indirect tax base of for the government, and also lesser practices in tax evasion. So this is the basic overview of the GST system in India, and we are very hopeful that many business person and the business community as a whole will be benefited from this GST, and certain kinds of benefits which were not possible under the old system of VAT and central tax and service tax. Those all those benefits are now easily available to the business community, which will result in overall economic growth for the nation. So thank you everyone, and that's all for now.